Good morning, ladies and gentlemen. My name is Paul Wallace. I'm a trader and coach to traders, and the investing channel have invited me in this morning to have a little chat about the impact of US-China trade disputes and how that's having an impact upon markets and what I see from my own view as a trader. So the investing channel have a wide and fine array of speakers who can come in and talk about the sort of the deeper geopolitical and fundamental analysis side of those disputes between the US and China. I am a simple trader, ladies and gentlemen. I'm in the business of decision making, and so actually I just have to look at charts and sort of make a decision and trade what I see. So I have a few charts here for us to have a quick look at. If we have a look at our first chart here, this is a chart of the China A50. Okay, it's the sort of Chinese benchmark index that allows sort of overseas investor to have exposure to domestic shares in China. This chart here is a daily chart. My charts are actually pretty simple. Okay, I have green bullish, red bearish candles. There is a blue 20-period moving average there, a red 50-period moving average, and a green 200-period moving average. As I said, that's the daily chart, and actually what you can see there, I mean, you can see for yourself actually, you know, for the majority of 2019, it's been actually in what you would almost call like, you know, a lovely textbook uptrend, beautiful, okay? I admit that I don't personally trade the China A50, but I look at it, I use it as a bit of a barometer, and I'll show you how that actually has that impact. But what we can see is on that chart is that as the price rallied up, right there around about 22nd of April, we had what we'd see there, what some people would call a bearish engulfing candle. Some might call it a key reversal. I would look at that as a key reversal candle. Price pushed to new highs, but closed beneath the lows of the previous candles. And then you can see that actually price rolled its way off the top. What I take an interest in is that, you know, that sort of first little move down, price tried to rally back up, but it couldn't get back up above that 20-period moving average, the sort of the blue line there. And that kind of starts to get me interested, all right, when, you know, the 20-period moving average has been acting as dynamic support. Once that becomes dynamic resistance and helps forms a lower high, that gives me an indication that effectively that, you know, that instrument is ready to roll over, and I'm normally ready to sort of to short that. And if you see that actually is played out across the US indices, which I'm sure you're well aware of and see it yourself. So, you know, as I said, I don't actually trade the China A50, but I use it as a barometer, and that gives me an idea of how to trade other instruments. So if we go into my next chart, I'll show you a little bit how I use that information. The next chart is about it's a chart of the Australian dollar against the Japanese yen, and in particular, it's on the 4-hour. Now, what we see is, you know, when I talk about within FX markets, I'm a great fan of effectively looking to sort of buy strength and sell weakness. As the sort of the shenanigans with Mr. Trump and President Xi has enveloped over the last couple of weeks, what we see as always is that, you know, we had an inflow of funds into Japanese yen, okay, as a safe haven currency, but also, you know, a sort of a selling of the Australian dollar across the board. Why? Because invariably we have the Australian dollar is a very, very reflective. It's almost like a proxy for China. And so we can see here, this chart actually just is in, once again, it's just been in a beautiful 4-hour downtrend showing Australian dollar weakness and Japanese yen strength. And if you look across all of the Japanese yen pairs and across all of the Australian dollar pairs, what you'll actually see is that sort of strength and weakness being played out there. So by all means, add that to your watch list to have a look. There's a couple of great trade opportunities setting up there. So if we go on to my next chart, which is gold, okay, here we are. This is once again, it's a 4-hour chart on gold that I have. Now, you know, invariably, normally we see, you know, quite a big move into gold when actually the world starts to get a little bit hesitant, you know, and what I saw there was, I see that as a, you know, what's that effectively is a double bottom pattern sort of playing out there in the 4-hour chart. And actually price started to try and make a rally up there. It broke that sort of trend line. And then, you know, what you can see is that price was actually just sort of bouncing between the 200 period and the 50 period before it blew north up to the 1300 level. I see that now as a bullish flag pattern, and I'm looking to sort of see how that plays out over the next few sessions. My final chart is, you know, gives a little bit different, and this is the daily chart of Bitcoin versus the US dollar. Why am I interested in that? Well, what has come out of these talks is that China has brought in capital controls on effectively, has lowered the amounts that people can take out, Chinese citizens can take out of US dollar. And I see that that's what actually has been that pump of people into Bitcoin as people in China try to get around those capital controls. And that is why we've seen going from 3,000 to 8,000 over the last couple of months.